6 o'clock in London, it's 1 p.m. in New York, 1 a.m. in Hong Kong, 3 a.m. in Sydney, 10 a.m. in San Francisco, and 10:30 at night in Mumbai. Greetings, good morning, good afternoon, good evening, wherever in the world you are today. My name is Patrick L. Young, the IPO-VID live stream, Series 6, Episode 2. That's number 32 in the pantheon of live streams. Starts here. And first up, ladies and gentlemen, a fond farewell to the most influential CFO of the exchange parish. Scott Hill oversaw some 40 epic deals in 14 years at the helm of the rapidly expanding balance sheet of the Intercontinental Exchange Group. He departed office last Friday. All the best to Scott, and indeed welcome to Warren Gardner, who clearly has a thing about filling big shoes. After all, he arrived at ICE to run investor relations, stepping into the position left by the inestimably brilliant Kelly Loeffler. And now Warren is moving on up. He's stepping up to fill the role which Scott Hill excelled in for the past 14 years. Meanwhile, unfortunately not such a good tale of the balance sheet. It's business as usual over at the failing TP ICAP, which has a crazy plan but no clear strategy, an incoherent management, and an increasing black hole masquerading as accounting where the numbers just don't add up. In the middle of all that came the latest results, which showed another 9% drop in quarterly revenue and yet more disappointment. True, the stock is a fair distance off its lows, but the simple truth is the company has now gone, well, worse than nowhere for 5 whole years. Let's not waste any time over going that old ground and recovering that once again, but just do some simple math. TP ICAP, Tullett Prebon, which is at that point in time a £1 billion company, completed the £1.28 billion acquisition, that's $1.6 billion for our American viewers, of ICAP on December the 30th, 2016. That was all of the old voice-broking assets of the Michael Spencer ICAP empire. At the same time, earlier this year, TP ICAP finished the purchase, a total consideration of the deal for LiquidNet on the March the 20th, 4th, 2021 was $700 million. But the amount it's actually on the hook for in the course of the near future is about $525 million, £375 million in old money, with another $50 million or £36 million in 3 years. And there's also a possible $125 million, which is performance related. I think we can probably discount the performance-related issue, given that the LiquidNet deal completed at the same time SIBO announced it was acquiring Chi-X Asia Pacific, and thus enabling BIDS Asia to take flight. Thus, the TP ICAP likelihood of reaching the earnout of $125 million on LiquidNet can probably be discarded. However, just to take you back through that quick bit of not overly tough math, we have £1.28 billion plus £36 billion plus £375 million, £36 million and £375 million, which leaves us roughly at £1.691 billion. As of now, the TP ICAP market capitalization is £1.72 billion. So we're barely, talking about a little chance of nothing more than roughly 30 million or so pounds or something like that, which is all that remains of the £1 billion balance sheet that was Tullett Prebon before it ever dreamed of taking over ICAP to become a behemoth. Okay, so maybe having a significant number of legacy, podgy, middle-aged health risks on the book, they're also known as brokers, may be regarded as a liability, but there must surely be some assets on the books of TP ICAP, as per se, its market capitalization pre-ICAP was, as we said, £1 billion. That suggests that this frankly inspired run of value destruction, and don't even get me started on the egregious dilution from the LiquidNet related rights issue the other month, has been, well, what can we say? A failure of management, a failure of strategy, and ultimately, sadly, TP ICAP burning pretty much all possible bridges as a parish leader. And we're going to get back to TP, or at least the T of the TP, in a few minutes, because this is, I suppose, a sad way to introduce our guest today. However, let me say, all this information and more, much more, has already been covered in greater detail at the Bourse Business Water Cooler Exchange Invest Daily, the unique newsletter of the exchange market business. Send us an email or hit me up on social media, wherever you're watching this, Patrick L. Young, and we can get you organized to have a free 30-day trial, which will not only help you understand the exchange business much, much better, but also indeed help pay for the lavish expenditure of our gallery of producers for the likes of this live stream. In the meantime, let me ask you one thing before I introduce our guest today. Please, 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 a little bit of love. Give us anything, a like, a comment, whatever it is. We would love to see it. It helps rush us up to the top of the search engine optimization whizzy thingies, and therefore allows more people to know all about the IPO-VID live stream, because today's topic is towards a digital market profile. And we've got a super esteemed technical analyst guest today with us, Clive Lambert. Clive is the author of Candlestick Charts, published by Harriman House in 2009. He has over 30 years of market experience, including a decade on the floor of the London International Financial Futures, better known as LIFFE Exchange. He's run his own technical analysis business, providing private analysis for the finest of the investing world the world over, called Futurestechs, since 2000 AD. What a right number to form in. Clive is the Vice Chairman of the UK Society of Technical Analysts, great people, and he's the European Vice President of IFTA, the International Federation of Technical Analysts, which it was my pleasure to address as a keynote many, many years ago. Clive has appeared on CNBC and Reuters TV, amongst other media, is quoted widely on newswires, and much more importantly, he's here in the studio tonight, coming to you on IPO-VID livestream. Clive, good evening. Where in the world are you today?
Hello, sir. I am in Essex. Being an Essex boy, not too far from my roots, and I'm currently coming to you live and direct from the shed at the bottom of my garden, or should I call it my garden room, my garden office. So yes, good to see you.
Excellent altogether. Well, nothing wrong with sheds these days. They've been a prime source of offices for lockdown. I imagine you've got one of those very snazzy numbers like David Cameron has, from which he answers questions by people asking him about backhanders in Parliament and things like that these days. But we certainly can't accuse you of taking any backhanders whatsoever, Clive. So actually, it's quite funny, isn't it? I mean, here we are talking about TPI cap and the decline and possible fall of a great name, the value destruction. And where did we meet all those years ago? At a little old company called Tullet in Tokyo, which I suppose means that if you've had 30 years experience in financial markets, I must have too, but I'm obviously looking very young on it. At the same time, it's actually incredible, isn't it? So think about that. When was that? Late 1980s. We were all working together across the floor. Gosh, was that still back in the Royal Exchange at that point in time?
I did 1 or 2 years on the Royal Exchange before it moved to Cannon Bridge, and prior to that, I actually cut my teeth in futures in the Sydney Futures Exchange. In fact, I did a stint in Sydney and on the futures floor there, and then came back to London and carried on my futures career there, and that was all after having done 3 or 4 years as a very junior, squeaky voice junior stockbrokers clerk on the old stock exchange floor for a brief time.
Oh, absolutely incredible. Well, certainly Sydney Futures Exchange, great place, and also very civilized, because they used to have a lunch break, if I remember.
An hour and a half for lunch, in which time some of the traders used to go surfing at Bondi Beach.
Well, it certainly beats drinking, which is what every other trader did on their lunch break in London. Yes,
and it was actually, over a steak or Burgundian pie at a certain establishment around the corner to the exchange where I first bumped into a mutual friend of ours, Miss Kathy Lyle. So,
gosh,
me and Lily go back. Yeah, that was 1990.
Quite incredible altogether. Quite incredible looking back on these aged days altogether. And good evening, let me say so to Christopher Messina. Thank you very much for sending us a message of nothing but love this evening, Chris. Thoroughly appreciated. Good to see you back watching the show as always. Chris has been an illuminating guest on this show, both our first guest, and he was also back in the studio just a couple of weeks ago talking about all sorts of things, including rare earths. So if we're talking about the world of rare earths, well, we'll probably get back to that in a minute. But I mean, futures markets, the development of futures markets has been absolutely sensational, hasn't it, over the course of the last 20, 30 years? I mean, you think about where we were at ASX in 1990 or the LIFFE Floor in 1990 to the present day. Quite amazing.
Yeah, I mean, there was 800 people in the Royal Exchange when I started on the floor, and towards the end of the 90s, when I finished up on the new floor, there was well over 3,500, I think. They just had to keep knocking bits out to make the floor bigger, and then suddenly bang, everyone was doing their UX exams. It all went electronic, and it happened so quickly, and it was really quite a shocking time how quickly that happened to the live floor. With the bund pick just going like that. Although I was lucky enough to be broking on the short end of the market, the Sters, the Euromarks, and the Euro Lira as it was then. So we managed to, Life held on to those contracts, and I managed to stick around. And then moved up to the office with this Italian bank that I was working for, Kubota Securities. When I started in the office, we weren't allowed to go to lunch anymore. It was all a big culture shock. That's when I started writing analysis, basically, when I started looking at the charts and putting stuff out to people. So that was sort of the story of my transition, if you like, once the floor packed up.
Well, it's incredible to think about it, actually. I mean, you're talking about a couple of things there, apart from the fact that, good grief, how on earth can that be the end of civilization? Surely when you go and work for an Italian bank and they won't let you out for lunch, it seems absolutely sacrilegious. But one of the things you mentioned there, which is quite intriguing, of course, is Euro market, Euro Lira. I mean, we've now got a whole generation of traders who are only used to the idea of a euro. They didn't realize we used to have the joys and excitement of different yield curves. Oh, hold on a second, though. Yield curves, we don't really have those anymore either in these quantitative times. Anyway, there used to be different currencies, right? I mean, there were all these different currencies all around Europe. So it's quite incredible to look back on that. You had open outcry trading. You had separate currencies for the whole of what is now the Eurozone. And some of them were incredibly volatile indeed. The mark in the Lira indeed was, certainly the Lira was spectacularly volatile throughout time. And nowadays, then, as you say, I mean, suddenly this thing happened, the Battle of the Bund, which is mentioned in a certain book called Capital Market Revolution, which was written by yours truly in 1999, describing how that all happened. And there's your copy, Clive. Oh, delighted to see it. Love to see it. Gosh, after it looking pristine after all those years. That's very impressive. Very impressive. There you go. Yeah. So I'm honoured that it's sitting up there taking pride of place alongside your own excellent tome on Candlestick Charting. That's very exotic altogether. But then, of course, the thing that's fascinating about that is you look at the whole revolution. I mean, we went from floor to screen. You had the death of the sort of the local trader business. You've got all sorts of changes in the way proprietary trading works, the growth of algorithms. But at the same time, sort of the more things changed, the more things stayed the same in a certain way, didn't it?
Well, it's you've just had your say about TPI cap, which I couldn't possibly comment on. But that's a voice broking business, and I honestly thought in 2000, when I packed up broking, that broking would be dead, and it's defied that. 20 years, voice broking is still a thing to this day, especially in some of the markets that I'm involved in these days on the energy side of things and that. So that's one observation I make straight away, is the remarkable resilience of voice broking throughout the last 20 years. I really honestly thought that it was dead 20 years ago, and I was wrong.
It's very...
Prop trading... prop trading's had a very interesting time during that as well. Yes, you had your local traders on the floor. Some of them transitioned very, very nicely into screen trading. Some of them just didn't. Some of them got out and just did something else. Terry Crawley, who was the big trader in the Italian bond pit on Life, never traded again after the floor closed, and instead took up playing golf and got his son playing cricket, and his son now plays cricket for England. So I hadn't. There's a family with some talent, hey?
I must admit, I missed that. I hadn't realised Terry Crawley's son ended up playing cricket for England. So it's quite incredible. But yeah, I mean, the whole floor to screen thing was interesting. So I mean, I remember the CME was the only exchange in the world that actually coherently tried to train teach its traders to go from floor to screen. And I was delighted to be part of that whole initiative under Vice Chairman Jimmy Olaf. And it was amazing because in London, there just wasn't any chance to train people. I mean, the whole thing it exploded so quickly. The floor was gone within a matter of months, and everybody was crawling around trying to work out what to do.
Yeah, absolutely. I remember going to Chicago in 2005 or 6, I think, to sit in a room with a panel of people from London who, the CME had sort of got us over there to talk to the locals from the floor there about, the realities of screen trading. And yeah, I mean, I enjoyed that trip. It was a good one. I think it was all around the same time as what was the Futures Week thing in November when it always snowed.
Expo.
Yeah.
FIA Expo.
Yeah. Rolled into that, and it was an absolute. I love a trip to Chicago. You can't beat it, can you? But yeah, we were over there to sort of say, right, well, this is how we're doing things in London, and they were just looking at us as if to say, yeah, but we don't want it. We're not interested. And we're kind of going, well, give you a clue. Whether you want it or not, it will smack you in the face and happen at some point, and you're just going to have to crack on with it, because that's what happened to us. It was, as you say, just almost overnight, and people had to adapt extremely quickly. And some did, some didn't.
I remember going to CME at that time, and actually there was I was trying to find a way to really hook them into being interested in this whole week course of information so they would pay attention. There was actually, I think, the Sunday magazine of the Chicago Tribune had run an article about what people earned in Chicago, and I pulled this out, and people, they were all very dismissive, and I said, well, just understand the thing, essentially it is incredibly difficult to make $50,000 a year in this time, at which they were all incredibly dismissive and bursting out laughing. And I said, and now let me tell you about someone I know who used to work on the LIFFE Floor, and he's not alone, and he's now a dog walker. And dog walkers make, and it was however many dollars it was, which was not $50,000. And the whole room was absolutely silent as this got in. And then I left them all an email, and they could contact me anonymously. And that night, when I got back to a friend's house where I was staying, I had like a dozen emails, all headlined, I don't want to be a dog walker. Okay, I'll listen. How do I do technical trading? How do I understand how to look at screens? It's quite incredible, the whole thing altogether.
Yeah, my personal experience, it was one of those seminal moments, and I set up a business on the back of it, because I'm known on the floor as one of the chart guys. If you want to know where your levels are for the Bund today, go and speak to Carol over there or Clive over there, because they're the guys that do the charts. They do the guys that do the levels, and so that's how I set my business up. So for me, the floor closing was absolutely one of those key moments in my career. It's because that's when I started the business, and I wouldn't have been able to start the business without having half a dozen of those guys as clients from day one. Well as a few other, Kubota hung around as a client for a few years as well, and one of my first clients was Marquette Partners, which was at the time being run by someone else that you probably know pretty well, a top man, Dave Felters.
Dave Felters, yeah. That's fantastic. It's incredibly incestuous, the way all these things go. Dave Felters is one disadvantage being in life, that he didn't actually work for Tullets, unlike you, me, and also I suppose he almost worked there, Jake Pugh, who was an earlier guest in this series about 25 episodes ago. So yes, absolutely. I mean, there's so many of these different parties all the way around. So anyway, but looking at the resilience of voice broking, the resilience of voice broking is all because of a certain kind of negotiated product, isn't it? Where you look at simple transactions, buying and selling of futures, the things you used to do in the Italian lira, Euro lira pit and things like that, or the Euro mark pit, that all just went electronic without any great difficulty whatsoever, didn't it? Yeah. And therefore you've got this resilience of voice broking where you can end up with a negotiated product in some way, shape or form, which is quite incredible. And then we're at this sort of interesting interregnum now. What are you thinking about this amazing COVID-y, GameStop-y, Reddit, our Wall Street bets, retail megalomania and crypto? And I'll just leave you to answer that for the next 40 minutes, actually.
It's certainly made life quite interesting in the last sort of 6 months to a year, hasn't it? I remember when the GameStop thing happened, and then they said like next we're gonna have to go to silver next, and I remember thinking, yeah, well, good luck with that, because silver's a proper big boys market, and yeah, big boys and girls playing in that one, and you might have a bit of trouble. You know, that's not a small cap video shop chain. You know, that's it's a big market with some big players in it. And as far as coins and things are concerned, I'm now having to read up and learn and get to know these things. They actually chart pretty nicely, a lot of these things, and so I am sort of you know, I'm going to be dipping a toe into that space as far as you know, as an analyst soon. But yeah, it's they're markets at the end of the day. They're markets that go up and down, and you can trade them. And I think that the most important thing maybe that anyone like myself and experienced operators can do is to try and educate people into how to actually, you know, hold on to your money, and how to, you know, work stop orders strategies and just simple stuff like that, because you're going to see it, and we've seen it before. We've seen it, you know, tulips 300 years ago. People will just hold on and watch it go all the way back down again, and you know, someone who, you know, 3 weeks ago was a millionaire ends up with nothing because they didn't get out. Quite simply. And I think that's probably one of the biggest challenges that maybe, or you know, that would, I think it's an exciting thing for someone like me and people like us to be able to try and help people to navigate, if you like. And yeah, well, I mean, isn't it great that there's so much interest in trading from left, right, and centre everywhere? So many people interested. I like that. I like that. Apart from when people are asking me about it down a pub, and I'm like, look, I'm having a drink. I'm not really interested.
It's a bit like technical analysis when you're out of hours. It's a bit like comedy. You don't want to talk about it, right? It's the same thing. When you meet Rowan Atkinson and he's going car racing or something, he's completely unfunny because that's his work persona. It's a totally different thing altogether. So
when I do training seminars and I get to talking about the head and shoulders pattern, I say, this is one that people ask me about at dinner parties. I say, what do you do, Clive? Oh, I'm a technical analyst. What? All that like head and shoulders stuff? Yeah, that's right. Yeah. Okay. So yeah, that's really interesting. No, it's not. It really isn't. That's just my view.
Well, we're here at the moment, ladies and gentlemen, working our way towards a digital market profile with Clive Lambert. He's the proprietor of the business Futurestechs, providing lots of proprietary traders and investment houses and other major public entities the world over with technical analysis information. If you want to ask him a question, we're currently live on multiple streams, so just pop us a question there and we'll be happy to answer it. Thank you very much to Christopher Messina. I see you making a couple of interesting comments along the way. Yes, indeed, on your first comment, what a tiny world. A bunch of my college pals went to work for Marquette in the mid-1990s. I'd totally forgotten that. Yes, the Marquette guys were absolutely fantastic. Quite an incredible company in Chicago and London.
Yeah, their London offices in Shad Thames are absolutely neat as you like. They were excellent. I loved going in there and chatting to those guys, and you know, it was a really neat office. And yeah, they embraced my analysis early doors and were clients right up until the last couple of years, really. But that which probably sort of segues into something else we can talk about with respect to sort of client demographic of mine these days, because it's changed quite a lot. I mean, it's changed for about the third or fourth time in 20 years. But
well, that's interesting, because let's move on to that about technical analysis. First of all, just a quick shout out. I'm going to come to Chris's question in a moment, but first of all, yes, he's giving us a quick bit of PR. One of his Messy Times podcasts, I do believe, has been talking all about GameStop and Reddit are not the sort of droids you're looking for. So there you go. That's a podcast you can pick up, ladies and gentlemen. Messy Times with Christopher Messina. I was lucky enough to be a guest on that just a few weeks ago. It's a great conversation. In this case, we were doing it from Valletta in Malta, where I am, to the heartland of Florida, where, in fact, the great American secondary migration is going on at the moment. That's not the one where the foreigners are trying to get in. That's the one where the New Yorkers are trying to get out of the tri-state area. Anyway, enough of Florida. We'll come back to Chris's question in a minute. So tell us a little bit, how you got into technical analysis. You said, okay, you started making levels at Caboto and so on because they wouldn't let you out for lunch. But what actually drove you to take an interest in technical analysis, Clive?
It was partly my belief, which I've already touched on, that broking was going to die. And I was sitting in an office broking, but my broking skills were hand signals, shouting and counting up very quickly. All the skills you had on the floor. And I wasn't the only ex-floor person sitting in an office looking at a screen going, crikey, like what the hell's going on here? And I felt that if I wanted to stay in this game, that I needed a supplementary skill. I needed a broking USP, if you like, and I still believe that's the case now for any young broker. Anyone starting out in broking, I say to them, find a USP, find a thing that you're good at, where you can add value. And that's what I was thinking. And there was a chap sitting on the desk who was bored with putting levels out on the Bund and the BTP every day. And I just said to my boss, can I do it? Can I do the levels instead of Andy? Because he doesn't want to do it anymore. And actually that boss laughed at me when I said that. Oh, Clive, so you think you're a technical analyst, do you? And I just said, well, no, but I've got to start somewhere. And 6 months later, he's taken me to hedge fund offices in London and saying, this is Clive, he's our technical analyst. So I sort of looked at him and went, oh, okay, so I am now, am I? Because it turned into quite a successful product quite early doors. And I went from, the guy that was doing it before me was just putting it, just typing it onto a Bloomberg page and sending it, whereas I stuck it into a PowerPoint, tried to make it look pretty and turn it into an actual product, and that was the start of it all for me, really.
Fascinating. So therefore, Chris Messina, he's asked a great question to kick things off straight into a higher gear about technical analysis. And he's saying, Clive, which markets are more amenable to technical analysis than others?
Every market trades differently and has a different personality, and so you can't apply the same technical analysis to Brent crude as you would to short sterling. So that's obviously a thing that comes with experience. The very simple way to answer Chris's question is this: I have over the years been asked to analyze all sorts of different markets that I've never even looked at before. Can you do technical analysis? I did some work for CME and CBOT back in the late 2005 to 2010, and they said, can you do charts and analysis on the ags for us? And I went, yeah, I'll give it a go. I've never looked at them before. I never looked at a soybean chart in my life, but okay, fine. When I started doing the energy markets, and I was doing a white label for the broker GFI, and they said, can you look at coal? Can you look at carbon? Can you look at can you look at gas? All these things that I'd never looked at in my life. And I said, yeah, and I said the same thing. I went, yeah, I'll use the toolbox that I use, and I'll learn on the fly, and we'll see how it goes. And it worked out very well. If I had to choose what markets are more amenable to technical analysis than others, I would say, as a rule of thumb, if a market has very mixed fundamentals, then people tend to look at the technicals a little bit more. So where you have a market where the fundamentals sort of are quite solid or well covered analyst wise, then that can using the technicals alongside the fundamentals can work well. But if you've got a market, and one example is carbon emissions. I've sat with on panels at conferences about carbon where people have said completely the opposite. Two fundamentalists have said completely the opposite. One said it should be 0, one said it should be 100. And you're going, and someone came up to me at the end of one of these and said to me, said I'll tell you why they think technicals work is because no one's got a bloody clue about fundamentals. So I was just smiled and went, okay, great, yeah, that I can live with that sort of thing, you know. So yeah, it's, you know, there's no hard and fast answer to that, but hopefully that puts some colour around that sort of question. I think it's a testament to technical analysis as a methodology and as a art or whatever you want to call it, that I have been able to transpose my skill set across asset classes. And I actually pride myself on knowing bugger all about the fundamentals on most of the markets that I analyse. I don't want to know why things are going up or down. I'm just looking at the price. I'm your price guy. This is what my clients love this as well. They love the fact that what they're getting from me is pure 100% technical analysis without my opinion coming into the equation at all. So I'm just looking at the chart and my analysis will purely be based on the chart. So for me, actually, I prefer to know as little as possible about the fundamentals.
Interesting. So I'm going to come back. Thank you very much for that question, Chris Messina. I'm going to come back to this next question in the Slack from Chris Prywell. Good evening, Chris. It's lovely to see you this evening. I'm going to come back to that in just a minute. If I can have the second question, actually, there's a follow-up from Chris Messina, which I think is quite useful. If I may have that on the screen, please. So do you keep a tracking record, Clive, of each set of predictions versus the realized market results? And if so, are there any technical course corrections to the methodology?
Right, I don't keep a track record because I don't tend to suggest outright trades on a day, you know, or daily or weekly basis. And the reason I don't is because I've got, in most of the markets I analyse, I've got a wide range of clients with respect to their timeframes and what they want out of the analysis. So I've got to try and sort of write analysis that sort of pleases everyone, sort of thing. So, you know, I will talk about the short-term trend and short-term levels, and then what's the bigger picture trend and what's the bigger picture targets and that kind of thing. So no, I don't actually have a firm track record of my analysis, apart from, you know, apart from saying that I've had some of my clients I've had for 15 years, and some of my clients that I've got now are amongst the, you know, some of the biggest companies in the energy trading space, and they're still buying it, you know, and still reading it every day. So yeah, that's sort of an answer, isn't it?
So it's interesting. Thank you very much once again, Professor Messina. I think it's an answer in that no, you don't. I think that was the answer you were going for there.
No.
That's an interesting piece of science or non-science in terms of the development of what you've been doing there, Clive. Actually, a great question from Chris Pryor-Williard. And given your floor experience and given the fact that you've talked about how voice broking has never gone away, around alternative uses for the LME floor, because as we know, the ring is currently under threat, and in early June they're going to decide its future, which is the idea of using the LME ring as a nursery for new products and contracts. Do you think that has legs?
I've got some pretty firm views on the LME, to be honest, and I've got some friends who are ring traders, but again, in my, you know, we almost harking back to the same thing I said about the death of broking, and I got that wrong. I've been absolutely amazed how that exchange has managed to stay, you know, to remain a open outcry as long as it has. And I think that possibly COVID has sort of it's the tide's gone out, if you like.
Okay, but I think maybe what Chris is trying to ask is not so much about metals per se, but actually looking at just, there's a ring. There's this lovely row of bunquettes, the semicircle either side, that could be used for some form of alternative trading, maybe not in something that might rust or be an element. What do you think about the idea that that could possibly be used as a way to be a nursery for the trading of certain new products, instruments, whatever?
Yeah, I don't know. I don't know whether that's got legs. I think that there should be a restaurant in London that's based around futures, where you have to, you have to bid up for the cocktails or something, and maybe it should have all like lovely Fibonacci spirals everywhere as well. Maybe that's not what I need to do.
There used to be a fish and chip shop actually like that, a rather upmarket fish and chip shop. I think it was Giles, it was called, or something, in Notting Hill, where you could endlessly have an entertaining time because you pretty much needed to record what the price was with the timestamp when you ordered the fish, because they'd move the price of the fish up as they ran out of stock, and then by the time you paid your bill, if you happened to have pudding, then usually you'd find that the price of the fish had gone up, at which point in time you said, no, it was only £10 when I ordered it. And they go, no, it's £12.50, it says so on the board. So there was all sorts of issues with time stamping, price reporting. It was unregulated in the extreme. It just goes to show how well run futures markets are in this world. Okay, well, it's interesting. Thank you very much, Chris Prywell. I do think there is an incredibly interesting opportunity for mercantile commerce of some shape or form to take place in the ring, because it's a multi-purpose reusable venue. I'm not sure it's going to be the home of the future of incredible futures contracts as of now that are going to trade a lot, because those are the sorts of things like Merban, where they create a futures exchange for ICE Futures Abu Dhabi. Interesting what you were saying about the whole concept of auctions as well, about carbon and so on. And obviously tomorrow at midday UK time, we've got the first UK carbon auctions that have ever taken place, because they're now separate from the EU alliances, and that's going to lead to, there's a new futures contract being released actually tomorrow morning, I do believe, in carbon emissions for the UK alone, and that's of course with no offset into the EU. So there'll be even more strident opinions the next time you're invited onto a panel for that one, because it'll be Brexiteers, Remainers, carbon up, carbon down. Good grief. If you throw in Greta Thunberg, it'll probably be a near riot. Quite fascinating altogether what technical analysis can manage to make out of that. So tell us, Clive, when you're using technical analysis, we're not trying to get all of the secret sauce of what you're doing. Thank you very much once again, Chris Messina and Chris Prywell, for your questions today. But give us a little walk through. You wrote an excellent book on candlestick charting. What different range of tools do you use during the course of a day's technical analysis?
Yeah, my approach is basically, in very basic terms, two-pronged, which is candlestick analysis on all sorts of different time frames. And I overlay that with Chicago's favorite way of looking at charts, which is market profile, which you managed to cleverly sneak into the title of our little chat here. And market profile was developed in the States and is, in very basic terms, volume at price analysis. It tells you what volume's gone through at each level, and whether you have certain price levels where there's a lot of activity, or conversely, very little activity, because price, the auction process of price moving up and down to attract buyers and sellers and to balance supply and demand, does see prices what's the word I'm looking for? Gravitating back towards these high volume areas, or or breaking through low volume areas and just going bang. And so that is my, I combine the two, and reasonably pretty successfully, I guess, because clients keep coming back for more, and so yeah, that's very much my approach, is profile and candlesticks overlaid, if you like.
Excellent. So let me ask another question then. When are we going to see your book about market profile?
I've tried writing a book about market profile about 5 times in the last 10 years, and it is a really difficult subject to try and make simple and trying to put in black and white. I've sat with thousands of traders over the last 20 years and sat with them and next to them and said, right, so come on in, what are you looking at? What technicals do you use? And the ones that say market profile, I go, right, show me how you use it. And they all give me a different answer. They've all given me a different answer. And so and actually the book on market profile
is that the Dalton Jones book?
Yeah, Mind Over Market.
Mind Over Market. Yeah, that is a phenomenal book.
30 years old. I can't stand this book. I can't stand it. I find it incredibly difficult to read, and so and that's no disrespect to these chaps who that really, because once you do get into it, yes, it is the tome, and it is a good book, but I've always found it really difficult, and so I've often thought, come on in, Clive, just what you just said, come on, write that book. And I've given up more times than I've just given up each time. I don't know whether it's because I've got no discipline.
Well, what interests me is the idea that I don't disagree with you. Mind Over Markets is an incredibly complex book, and the actual books by Pete Stobbelmeyer himself, who originally created the whole market profile and coded it, I mean, they actually tend to be a little bit old and eccentric, if you don't mind my saying so. I mean, I think he's a genius, but they're sort of semi-biographical, but at the same time, they leave a lot of information aside, which is not so clear. So if you find one book to be, how did you actually learn market profile if you can't read the books?
I learned it on the go. I learned it from traders, and I learned it just off my own, just from practical experience. And I mean, this is something that quite often people say to me that they like about my analysis, is that it is very much written from a trading and a trader's standpoint. A lot of technical analysis can be quite dry and can be written by people who have never been near a trading book or a trading floor. Whereas I've always tried to write my analysis like I'm talking to a trader, and that's where I learned a lot of the profile stuff from, is traders. And and said, been to Chicago. Every time I went to Chicago, I was running around as many futures trading offices as I could to sit down with guys who were using profiles, say, right, come on in, how do you use it? So yeah, it's yes, I've learned a lot from Mind Over Markets and Stottlemyre and those books, but I would also say that quite a lot of what I've done is been just on the job learning, really. The same with the candlestick stuff. It's price action at the end of the day, and that's what you used to watch on the floor, unfolding in front of you in the pits. I remember once a local a prop trader, after the floor closed, said to me, I don't use technical analysis, I trade price action. And I just laughed. I went, mate, it's the same thing. Technical analysis is a graphical representation of price action. How can you, and then he sort of tried to explain himself a bit, and I got it after a while. What he was saying is he doesn't need the chart to know where the levels are, because he's there glued to it the whole day. And I said, well, yeah, that's fine, but not everyone's like you, and not everyone's got a photographic memory for every level. So you do need, and the chart, technical analysis and the chart is a way of telling the story of price action.
Yeah.
Really important.
Yeah. Interesting altogether. We've got a great comment coming in from Alex Wilkinson, harking back to this debate about the future of the LME, the London Metal Exchange's rings. He's saying that, yes, LME could be a nursery for new traders, but it's unlikely that regulators would be mercantile commerce being transacted outside an auditable framework. I don't think anybody's suggesting that it'll avoid an auditable framework. I think there are lots of ways these things can be done, but it's just the idea of creating some sort of a more negotiated venue could be something a little bit different in order to manage to develop what needs to be some other thinking about the way that the City of London is working. Alex, great to hear from you. Thank you very much. You followed that up with an excellent question. So the question from Alex is, Clive, don't you find the frequency of government intervention is poisoning technical and fundamental analysis to the point where every trend is now analysed with the caveat that it's depending on the next tweet from Biden, Trump, Musk, etc.? Interesting question.
Yeah, I mean, I think that's why. I think that's what prop traders may be concentrating on more than anything now. Prop traders, traditional financial futures prop traders, which were, for 10 years my most important client demographic. That's why they're not anymore. That's because that's what they're trading. But I think there's what I would say is that whilst a tweet from these various people, maybe Musk in the last week is the exception to this, but whilst a Trump tweet a year ago might move the market 30 ticks, then the auction process will kick in and you will accept or react to that move. And so the technical analysis is the map of the market overall. And so the charts will reflect whether the market accepts or responds to those noise moves, if you like. So I think that technical analysis is a way of taking a step back from the noise and saying, what's the bigger picture here?
Very interesting. So let me ask a question. Thank you very much, Alex, for that most illuminating suggestion. And certainly in the world of QE killing yield curves, it's fascinating to see how reliant we've become on government. But then if we look at the overall change you've seen over 30 years from floor-based markets to fully electronic markets, in essence, I mean, there are one or two bits left in the world, but basically everything is electronic. Have you found any major differences in how useful technical analysis is?
I've been asked this question a lot, and one thing that I've sort of realised, having answered this question a few times now, is that I'm still, bigger picture wise, probably using a very, very similar set of tools, technical analysis wise, than I was 20 years ago. So no is the answer. Markets have changed how trading is done, and you do get maybe times where there's extreme moves based on tweets and stuff, but bigger picture, TA for me still works, and the similar methodologies. 2 weeks ago, Wells Wilder died, and Wells Wilder was the chap that came up with RSI, the indicator RSI, and doing a tour of my bookshelf again, if you like. New Concepts in Technical Analysis by J. Wells Wilder. This book was talking about new concepts in technical analysis in 1978. We're still using RSI with the same, lots of people are still using RSI with the same parameters he came up with in 1978 with a computer the size of my garden to be able to crunch the numbers over 4 days to work out what was the best settings for these things, or how these things work. So that resilience, if you like, I think is a testament to his work and a testament to a lot of technical analysis methodologies based, and obviously I'm going to champion this and shout it from the rooftops, because yes, I've made a living out of it for the last 25 years, and I'm also, as you introduced me earlier, vice chair of the Society of Technical Analysts and on the board of IFTA as well. So yeah. What do you think? Of course, I'm going to say technical analysis is great and it works.
Which brings us elegantly to a great comment that Alex Wilkinson has just offered to us on LinkedIn. Good answer, but I've been stopped out again by Twitter. We all know that feeling these days in the age of social media, which was obviously long before the heyday of Wells Wilder. And as you say, he was calculating all those sorts of things even before you could buy the Commodore PET computer or whatever it was that he was using in those days in order to manage to calculate, long before even the Apple II or indeed anything that we would remotely recognize as being what they called in those days the IBM compatible PC. It's incredible altogether, actually, looking at the whole thing. Ladies and gentlemen, we're in the last 10 minutes of this discussion this evening. We're here working our way towards a digital market profile with my special guest this evening, Clive Lambert, who's the boss of Futurestechs. If you want to ask us a question, bear in mind the fact that there's usually a delay. This is not ultra low latency, so therefore there may be a moment or two between the time you get your question into it arriving within our central node. So ask away right now if you've got a question for Clive. So Clive, I mean, with that, let's just look at, I mean, we've talked about the place in the world for technical analysis. You've been interested because you've been talking to us about how you've got lots of major league clients who are large kind of household name investing firms and oil firms and so on, as much as anything else, are using the services these days, which is very interesting. How has technical analysis ultimately advanced from the Wells Wilder era of crunching a lot of stuff on a very, very archaic computer?
Well, I mean, I do my technical analysis for these oil major firms from my shed. Not shed, it's my garden room. But and that, I think, on its own is, it sort of answers that question. You are able to crunch, I am able to, from here, sitting here, crunch huge amounts of data very quickly, and different methodologies and different ways of looking at the market. And so, you know, and then provide that analysis to some pretty serious players in those markets. And I think that is the main advancement, is the ability to be able to look at just vast amounts of data. I think 15 years ago, I was at a distinct disadvantage to, you know, someone. You had Murray Gunn as a guest on a few months back, and Murray in the noughties was working for HSBC. He had every single data source in the world available to him. I was on a 56k modem, you know, and a mouse that didn't work, and blah 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 blah. So it's the playing field's been leveled, but actually the actual nuts and bolts methodologies. Candlesticks is 200 years old. Profile's 30 years old. They're the things I use. What's probably changed is people now using technical analysis and certain, you know, using chart-based algorithms to. A lot of my clients, I know, they're interested in that and playing around with that sort of thing. So they're trying to automate a lot of the TA signals, and you know, that's an interesting place, I think, right now. I obviously don't want that to get too good because it'll put me out of a job.
There's a certain artisan criteria that you're still maintaining, which brings us neatly, Clive, as we're talking here towards a digital market profile on IPO-VID live stream this evening. Martin Watkins, another former guest on the show. Good evening, Martin. It's lovely to have you with us once again. Clive, to what extent are you maintaining the true principles of technical analysis and adapting to circumstances, such as herd mentality tweets, in the same way most financial markets adapt and react to a changing world?
Technical analysis is the study of the herd. You know, and one of the main tenets of technical analysis is that everything known about a market at any one time is in the price. And obviously a tweet can change that for sure. But one of the things that technical analysis assumes is that markets move in trends, and trends persist. and trends are created by the herd, and excesses are created by the herd getting greedy or fearful. And technical analysis is the study of price, and price is the arbiter of fear and greed in a market. So, I mean, does that answer? I think that answers the question. I'm studying, as a technical analyst, I'm studying the yin and yang of fear and greed and the trends that are developing thereon. And tweets generally, as I say, apart from last week with Mr. Musk, they generally sort of fuel the move quite often, to be honest.
Interesting. So in other words, it's a little bit like cooking Japanese food. I mean, the rice cooker was an incredible invention which made it a lot easier for us all to make fluffy rice, but ultimately it didn't fundamentally change the way we worked around our yakitori, or however you would look at these sorts of things, I suppose. Thank you very much, Martin Watkins, for that excellent question. So we just got about 5 minutes left. I'm quite interested. I mean, we're seeing technical analysis, I think, being taken more seriously, being used in more institutions these days. And you've obviously been using technical analysis a lot for professional energy trading clients in recent times. But just give us a little bit of a glimpse of what you think is happening in the world at the moment, Clive, because there's so much taking place. And thank you very much, by the way, Martin Watkins. He's just saying, excellent answer. Thank you very much. So there you go, Clive. Thank you, Martin, for your question as ever. But there's so much happening. So much happening right now. Even things that Elon Musk hasn't tweeted about are exciting in the world of markets these days. What do you actually think is happening, Clive?
I think there's so much news out there, so many places to look for news. There's so many. Twitter is the news. Who do you follow on Twitter? It's basically so noisy with respect to trying to work out what the bloody hell's going on, that actually looking at the chart is way easier. It takes because if you do make the assumption that the price is king and the price is the most important thing, and it is the reflection of everything that's known about any market at that very second, then that makes your life, as far as I'm concerned, that makes your life a lot easier. You don't have to worry about where to look to find out why things are moving. Just look at the price.
So whatever you do, the price is the most valid thing and the most important thing. So therefore, thinking about the price of a few things right at this point in time with 2 minutes to go, Clive, where are we? Is this a commodity super cycle that's just kicked off or is in progress?
Just had a massive buy signal in gold 2 weeks ago that said that gold can go to 3,200. I think was one of the targets I came up with. Oil looks very set to take out the highs from earlier last year. Gas prices are going up. Equity prices are going up. Bond prices look like they were about to, yields up, price down, but they've just steadied. I think that a lot of things, commodities and equities, are still looking pretty bullish, there could be some serious, the charts where they are right now, suggesting there could be some serious upside in some of these commodity markets still going forward.
That's quite fascinating. So therefore, does that mean that we're into this sort of roaring 20s thesis? Does that mean that we're not quite around 1929? We're actually maybe around 1920-21 or something?
Yeah, I mean, you could be right. But what was the old classic, the Shoeshine Boys story from that era?
We were discussing it with Dominic Frisby actually all those years ago. Yes, and actually I guessed who it was at the time, and I guessed the wrong person. Dominic Frisby told me off about it. So if you want to, go back and watch the Dominic Frisby show, ladies and gentlemen, and you'll be able to tell who it was, because I guessed the wrong oligarch. Oligarch at the time.
It wasn't JP Morgan, was it? It was
no, it wasn't.
Joseph Kennedy, I think.
It could have been. Could well have been. Yes.
Joseph Kennedy. Shoeshine Boy tells him to buy stocks, so he walks in the office and says, "We're selling everything," and the Wall Street crash happened, days later. And when he walked in the office and said, "Sell everything," after a 10-year bull market, they all thought he'd lost his marbles. But I'm sorry, there's been quite a lot of shoeshine boy type stories around in lots of things. Maybe a better arbiter, and I think you might like this one. What was the top of the .com bubble? AOL buying Time Warner.
Time Warner, yes.
Time Warner buying AOL.
Yeah.
Those classic. Something happens at the top of every market, and I think you mentioned the timing of the Coinbase IPO. And if you look at that on a Bitcoin chart.
Yes, well, I mean, there's obviously a huge correlation between the two as we're looking towards that, which is quite incredible. And that really, I think, probably brings us to the point where we're looking at the idea that gold might reach a high of 3,200. Next week, we're going to have a fascinating discussion with Flip Pideaux. We're going to be talking about the sharp end of, well, prediction markets with him. He's been a pioneer in that business for many a year. A couple of great shows coming up in the near future. We got Kenny Policari. He's going to be coming up in 2 weeks' time as well. Actually, in 3 weeks' time, because we've got a slight pause, I do believe, over the course of early June when we're taking a week off. So trends persist, ladies and gentlemen. Whether you're looking at Wells Wilder's RSI from the classic early technical analysis number crunching era of the 1970s, or candlesticks from 200 years ago, market profile from 40 years ago, 30 years ago, or whether you're looking at, well, whatever it is in the world of technical analysis, we're still on our way towards a digital market profile. We've been here with Clive Lambert. He's been talking all about different approaches through the courses of markets, the way that his own client business at Futurestechs has been changing remarkably, and how at the moment he's being fueled by energy in every possible way, shape and form. Well, however you look at it, ladies and gentlemen, this remains the study of the herd. Thank you very much for being amongst our elegant crowd, because we certainly wouldn't want to call anybody watching this show a member of a stampeding herd at any point in time. Particular thanks to Christopher Messina, Chris Pryor-Williard, Alex Wilkinson and Martin Watkins for your questions during the course of the evening. Particular thanks to Clive Lambert for our guest. I want to thank our executive producer this evening, Beata Trachikowska, our booker, Ola Kalushna, and also thank you very much to the ladies in the gallery, Marianne and Veronica. This is IPO-VID. We're going to be back next week. Thank you very much, ladies and gentlemen. Have a great week in life and markets. My name is Patrick L. Young. Thanks for watching.